The textile package for the industry has been okayed by the cabinet. Let's take it away to Supriya Srinath. And Supriya, we were the first ones to report. It comes true now. The cabinet has okayed the new textile policy.
Yes, I mean, this is the financial aid package that we had spoken about yesterday, and this has been okayed by the Union Cabinet. Just to tell our viewers here that the official announcement is yet to come, but it looks like the Cabinet has also given its approval to the spectrum auction decision that was to be made in the Cabinet today. Remember, this is a method and a package aimed at boosting jobs, creating about 35 to 40 million additional jobs in the textile space, and taking the textile sports to up to about $300 billion by 2025. It is going to, of course, like I said, result in job creation in the sector. It is going to include, like you were pointing out just before you came to me, financial aid for the sector, some tax SOPs for garment manufacturers, easier credit flow for textile sector, and incentivizing the domestic supply chains, wooing the global brands to come in and set up supply chain in India. That is a part of this package, is what we've been given to understand at this stage. We've also been given to understand that this is going to aid export of textiles and export of garments from India. And there's a reason why it's all coming right now, because the government does realize that apart from the fact that textiles as a space has been clamoring for some aid, has been clamoring for some help, given the slowdown that Indian exports have seen for 18 consistent months. But I think away from that, the fact that China is slowing down and it really is the big commander in that market, India has some elbow room, some catchment area to be able to grab a piece of, and you do not want to lose the competitive advantage to other destinations like Vietnam and Indonesia or Philippines. And to catch hold of that catchment area, it is important that the government stands by the textile sector, which, like you were rightly pointing out, is beleaguered and has been battered for months now, if not years. But that's the big news, and textile counters, I'm sure, are responding to that one. And on your screens right now, all right, we've got Mr. Sachit Jain of Vardhaman Group joining us on the phone line. Thank you very much, Mr. Jain. You were with us yesterday when we put out this information that the textile package and the textile policy will be up for a cabinet decision. It looks like the financial aid package has been given a nod to. Your quick first reactions, a much needed lifeline for the sector?
Yeah, but I have no idea of what's been announced in the package, so I can't comment on that. I haven't seen the package. But it's nice to know if the government has come out with the package, because this is something that was badly required in terms of the opportunity which is there for India as a whole. But I really can't comment as I haven't seen the package.
I know you haven't seen the package, but we at TT Now can tell you what are the broad contours of that package, and that really has to do with financial incentives for manufacturers, easier access to credit for textile manufacturers, also the package to contain measures to incentivize the domestic supply chains and to push textile manufacturers for exports. That's exactly what we're picking up at this stage. So as you digest in that news, I also have Mr. Govind Sharda of Nandam Denim joining us right here on ET Now. And Mr. Jain, I'm going to come back to you in just a minute, but Mr. Govind Sharda, the fact that the government has taken cognizance of the fact that textile as a space needs aid, needs a financial aid package, one has been approved by the Union Cabinet today. What sort of a lifeline do you assess this is for the sector that has been battered with global view?
Even I am also not aware about the exact packaging detail, but yes, textile badly needs the funding part. Recently, some 6 months back, government has already withdrawn the Textile Accreditation Fund scheme, which, of course, in the media we have heard that it is not going to harm the industry. But sitting in Gujarat, while we are interacting with not many manufacturers who are aspiring to put up their capacities, they have kept the capacities on hold. Textile remains the biggest employment generator, and I wish if government can continue with a similar incentivization scheme so that the capacities can be created. India is yet to cover the road to reach $240 billion export value. So as of now, everything sounds very ambitious goal, $240 billion, because if we are not able to put the capacities, and when the Indian population is also multiplying, we really need to put up the international capacities with the international technology. If the government has come out with a package to incentivize the manufacturing, I think it would be a great booster for the textile industry.
All right, great booster for the textile industry, and you can see the stock reactions coming on the counters as well. But we also have former Textile Secretary Ms. Rita Menon, who understands the big picture as far as the textile industry is concerned, joining us on the phone line. Thanks very much, ma'am, for being with us. A much needed incentive for the textile space. Is it a stitch in time, however, as far as the sector is concerned, ma'am?
I think it's a part of an ongoing process. I think government has been pretty mindful of the textile sector till now, especially on capacity creation and upgradation of technology. What I'm looking out for this very big ambitious target to be fulfilled is an emphasis on value addition, which I think is coming out because there is a lot of scope in the garment sector to take the place which has been taken by some of the other economies that have really invested in textiles like Vietnam and Bangladesh in particular, and to some extent Sri Lanka. I would be looking for some reforms so that there can be more women in the factory space with more shifts. And I'd also be looking for some incentives in terms of power, etc., for the South, which has actually been hit by a lot of power shortages. But all in all, I think if we are trying to get this level of employment and this value of exports by 2022, it's a very good sign. Are you hearing?
Fair point indeed, ma'am. And let's take this across to the, yes, I will just come back to you as we have more details, but let's take it across to the people. And please do stay with us, ma'am, because I'm going to take it across to the people who have their skin in the game, so to say, and Mr. Sachit Jain is one of them. But Mr. Jain, the fact that Ms. Menon did speak about, you do need things as far as value addition is concerned and the inclusion and all of that is very well warranted. But will this package alone ensure the jobs that a very job-intensive sector like textile needs to generate?
See, once the contours of the package can be commented more clearly, but if the government is going to incentivize what the industry wants is that all the indirect taxes that we are paying in terms of state taxes, if that can be given back in terms of increased incentives, or if we get better access into Europe, because we need an FTA with Europe very badly, because Bangladesh has duty-free access to Europe, Pakistan has duty-free access to Europe. If India can get that, they will give us a big booster. The whole thing is this can create a huge opportunity for India. And with China becoming more expensive, all buyers are looking for alternate sources to buy from. And if India doesn't get it up together, Bangladesh clearly is getting a start and already has taken advantage. So is Vietnam. And Vietnam is having an advantage now, will have an advantage in the next 5-7 years with PPP, and therefore eventually duty-free access into the U.S. So Vietnam has duty-free access to the U.S., Bangladesh and Pakistan have duty-free access to Europe. So India definitely needs the FTA. And then further we need some labor reforms which will help employment-intensive industries like apparel. So the focus should be on apparel and made-up and then fabric. Spinning can take care of itself.
All right, we're going to wrap up the textile discussion for you right here because the counters have reacted, the story is out, but I think the other story that's unfolding in the markets is also the fact that the government has given its nod to the Spectrum auction. Remember, this is the most awaited Spectrum auction, and I am trying to get my colleague Gauri Dwivedi on the phone line with more on this. But of course, the government has been was looking at two big decisions. One was the textile package, and the other, of course, is the Spectrum auction decision. And I want to get Gauri on the line, but it's important. Okay, Gauri is on the line. Do we have details of what exactly has been cleared right now, Gauri? The quantum, the pricing, in line with Telecom Commission. Just for the benefit of our viewers, can you expound upon all of that right away?
So, the decision that has been taken by the cabinet is in line with what the Telecom Commission has recommended. So, just to put it down simply, as far as the quantity is concerned, 2,000 megahertz of spectrum will put up for auction in 7 bands across 2G, 3G, and 4G. As far as pricing is concerned, for all other bands barring 700 megahertz, there is a basic markup that has been used by TRAI and DOT. As for 700 megahertz band, that is the specific band that will be put up for auction for the very first time, and therefore there wasn't any pricing benchmark. The pricing that has been approved is 11,500 crore rupees per megahertz. So for 5 megahertz, that's upwards of 55,000 crore rupees. Remains to be seen whether there's an industry appetite for that much of spectrum and and at that price. That is something that is a separate discussion altogether. But as far as pricing is concerned, 700 is definitely going to be an expensive band that will be put up for auction. In terms of the payment schedule and also the kind of money that the government is expecting, 5.56 lakh crore is the value of the spectrum that will be put up for auction, and the upfront payment that the government is expecting is 1.5 lakh crore. The expectation is that this auction will take place sometime in August.
Gauri, just hang in there because I have got Rajan Matthew joining us right here on ET Now. Thanks very much, Rajan, for being with us. The Union Cabinet throws its weight behind exactly what the Telecom Commission has decided, like Gauri was pointing out there. This is going to be an expensive affair, 11,500 for every megahertz. And of course, like she was pointing out there, 55,000 crore for 5 megahertz of spectrum. But what sort of interest do you expect this spectrum auction to generate? And do not tell me it's going to be tepid, because your lobby and your operators say that every time. But when spectrum is up for grab and sales, you really do put in, then park in the big dollar there.
So I think we will see interest in the 1800. Certainly, we will see some interest in the 21 and 23. The 25 and the 700 are the bands that have question marks around them. 700, obviously, for pricing issues, and 2500 principally because of developing ecosystem issues. So that's where we see the principal demand being focused around.
So 700 megahertz is not a spectrum that you believe is going to find a lot of favor with the Indian telecom industry. Not very enthusiastic bunch of operators there who want that spectrum. Help us and help our viewers understand, why is it that Indian telecom can survive without 700 megahertz right now?
So, first of all, 700 is a very desirable part of the spectrum for purposes of rolling out our services, especially LTE. The problem, again, as I indicated, is the pricing, which is being set at about 4 times the price of 1800 spectrum. The time at which 1800 megahertz spectrum obviously was set was in the context of limited spectrum, in the context of having to win back existing spectrum. So there are inherent anomalies on the pricing of the 800 as a benchmark. So the point we raise is that, look, at present, most of our operators have adequate amounts of spectrum to meet the next year to two demand. So because of spectrum sharing, because of spectrum trading, because of some of the harmonization that has been going on, the immediate pressure of having to get spectrum is not there. So we are looking at about 2 years horizon for the demand to really kick in. So the question is, do we buy it now, or do we wait further on down the line when hopefully there will still be, because there's a significant amount of spectrum now in the 700, and DOT has clarified that all of the 700 megahertz spectrum will now have to come through an auction. There was no question of giving it away for free. So that is good news from industry's perspective, and so it gives us some horizon to plan adequately to when we will require and buy this.
Fair point indeed. Let's take this across to Sanjay Kapoor as well. And Sanjay, do you agree with Rajan Matthews there that there is an inherent anomaly in what is being really put up? And it's not as if operators are in a dying need for 700 megahertz. So we will perhaps see them make those bets in some more time as that ecosystem develops. But we will perhaps see some good buying in 18, 21 and 2300 megahertz band. Is that a conclusion that you draw as well? Because the Union Cabinet seems to have thrown its weight behind, exactly like Gauri was pointing out there, the recommendations made by the Telecom Commission.
So few agreements and a few difference of opinions. First and foremost, we all know that existing operators are sitting on a lot of spectrum that they bought in the previous auctions, and a lot of that has not been deployed. A lot of universal spectrum was there where the usage has to be changed, the spectrum has to be refarmed, and that activity is not completed by operators. So my own take is, right now, given their priorities and given the stretched balance sheets of each operator, I think they will concentrate more on deploying the existing spectrum than amassing some new spectrum. For now, the law of diminishing marginal utility will set in for some of them to make those choices. However, I do agree with Rajan that there'll be selected spectrum where there will be takers. And my difference of opinion comes on 700. My own take is that in some circles, the 700 spectrum is very close to the price of 900.
and that price has been recently established and bid for by many operators, while 700 for indoor coverage could be even more potent than the 900. So if that is true, I see the market leaders and the bigger operators and maybe the challenger as well could be looking at that spectrum very keenly. And some of the spectrum goes into big states like UP, Bihar. And I'll be surprised if some of them who find that attractive because it's close to 900 may end up bidding for it. So there will be selective bidding. Will they take more 1800, 2100, 2300? I don't know, because I think right now everybody's priority is to reform their existing spectrum, put new electronics, take the spectrum indoors. And above all, I think very little investment has gone behind the backhaul in India. The fiberization of sites, I've written about it to say less than 20% of the sites are fiberized in this country. A huge amount of investment has to happen if we really have to provide a great consumer experience going forward on data. So I think given their priorities and given the consumer dissatisfaction in this area, I think their monies will right now go into making the existing spectrum work than to augment and store more spectrum. But 700 is very strategic. And if I go and bid in circles where it is closer to 900, then I block some spectrum of 700, and I also set a price for future for everybody else to grapple with. So that's my take on how things go. But I'm happy that government at least has 2,000 megahertz of spectrum announced. And everybody knows that this time around there's no artificial scarcity that's going to come. And therefore the real prices will emerge based on market mechanism going forward.
Fair point indeed. Sanjay Kapoor and Rajan Matthew, thank you very much for joining us with the telecom perspective on that big story. But I want to take this across to Dr. Arvind Virmani, who's joining us live right here on ET Now as far as the big picture is concerned. And Dr. Virmani, given the decisions that have been taken on Textile, on Spectrum and also on Uday, the larger picture coming out of this is that the government is on an economic decision overdrive. Is that how you read this?
No, I don't look at it as overdrives. I think we tend to take every decision as an overdrive. But I think what the overall message, and we discussed a couple of days ago also, is that the government is systematically going policy by policy and continuing that process. My fear was, when I made the forecast in March about the economic growth spreading and becoming more widespread around the middle of this year, my fear was that the government will slow down, will become complacent very quickly. And these things give me some confidence that they will continue to address the issues because they are very focused on the goals. And the goals and the methods are very clear. The basic thing being ease of doing business and make in India. And that is not, I've often talked about the jungle of controls, and that's not an easy thing. That's not going to get done in one day or 1 month or 1 year. And what these things give me hope of is that the government is focused and will continue to take the corrective steps and clean up this control jungle as they go along. That doesn't mean all the policy announcements that have been announced today are necessarily making a big step in that direction, because I don't really know the details. But the overall message is that they are focused. They will continue to focus on growth and economic opportunities, and they are not going to rest on any laurels.
That's a fair point indeed. They will not rest on laurels, but they will continue to focus on economic opportunities that come before them. Just before we wrap this, Dr. Virmani, will you agree with the assessment that Mr. Modi tried to woo the foreign investors by pushing the pedal on FDI liberalization? Very significant decisions taken there. And he's now, at least his government is now trying to focus on the non-legislative part of the economic agenda, the executive decisions that can be made to unclog the economy and to look at specific sectors that are reeling under a slowdown or are in trouble, whether it's power through Uday, whether it's textile that is, at the receiving end due to that global route. Is that a fair assessment, you'd believe?
Right. So, as you know, there are two aspects. One is the legislative agenda, which has to be done well in advance, and we know that the key issue now after the bankruptcy law is the GST. So, and the second part, of course, is the administrative part, which you quite rightly said, and which I emphasize, that it's a continuing process. It's not something which will be get done at one stroke. The third point you raise is the foreign versus domestic. And again, the initial focus on much bigger focus on FDI has been because I think the government correctly recognized that the internal cycle will take a little time to break, the corporate cycle, which again you and your viewers are quite familiar with. So they focus more on getting new interest, new investors, which is basically foreign. So I think that is has been quite right approach. But as we all know, this is again the FDI thing has continued, and as you speculated earlier, the timing, of course, is always chosen opportunistically. So maybe something on FDI which they may have announced 3 weeks later, they announced a little earlier because of other things that happened. But the domestic part is really, as many people have pointed out, is the much harder and longer struggle which will continue.
A very quick question, and I'm running out of time here, and so I will agree. I will urge you to be brief on this one. 75% of DISCOM debts to be converted into government bonds. This is going to have implications on fiscal deficit of the states, at least, won't it?
Well, these financial engineerings, I think the financial sector is more interested in. What really matters for us is the structural reform, the reform of the policy, the breakup of the three parts of the electricity sector, and how the state electricity boards are forced to become more efficient. And if that positive happens, these financial measures are just supportive. But if the former doesn't happen, then they become just hand waving. So really, from my perspective, I would focus on what are the reforms and how they are being carried out in the states to make them efficient and to make the prices flexible, because the oil prices may rise over the next 3 years. Will they be prepared to meet them? And that is the hope. That is what this whole program has been sold on, and we'll have to see. I mean, the pudding, as they say, is in the eating.
That is indeed true. And Dr. Vermani, thank you very much for sparing time out and joining us on the decisions that the Union Cabinet has taken, some very significant ones. But like Dr. Vermani was pointing out there, the focus is on economic legislation, economic decisions. They're perhaps, looking at FDI liberalization first and economic decisions that are of administrative nature now. But three big pieces of information coming in: a textile package, big shot in the arm for the textile sector. The other bit is the spectrum auction. Again, a decision long awaited. And of course, the third bit is the clarity on Uday bonds, 75% of DISCOM debts to be converted into bonds, but more financial re-engineering there than more than anything else. But Dr. Vermani, thank you very much for joining us.
Find us on Facebook at facebook.com/ETNow, and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/ETNow.